Hello, ladies and gentlemen, and welcome back. Well, just a few hours ago, everyone was bearish. Now, many people are turning bullish. Are they correct in the markets, or is this part of a larger trap that Wall Street is setting for all of us investors and traders out there? Well, one thing we know is the 20 moving average, that is the red sign here, loves to be touched. It's been a while. We've been theorizing it on the channel here for a few weeks, and so far so good for the bull brigade. With the new high kind of set on the stock market after the close, Netflix coming out with earnings, and the big one coming, which is Tesla, we've got so much to discuss today. So let's get into all of it right now. We've got macro, charts, and levels all coming up. See you soon. Well, welcome back everybody to the Daily Show here, where we talk about markets across the world, including stocks, commodities, and cryptos. If you like any of those markets, remember to subscribe, and let's get into the video. We'll begin by talking about Netflix's earnings. On the surface, not so good. In terms of expectation, a little bit better. Basically, they lost around 1 million subs. This was better than the expected 2 million subs they were going to lose, and earnings were coming in kind of about their analyst expectations. But this is the story of the earnings season. Have we truly seen the worst for companies yet? It's starting to look like not just yet, but when the Fed raises rates later on this year, I think it's going to hit the American consumer a little bit harder than many people expect. And we've got more on that later. Now, does that mean that we've seen the bottom? Well, we'll talk about that soon as well. Let's discuss one of the big points moving forward. It's going to be the outbreaks in China. If they continue to go down the COVID zero policy, it still will hurt inflation. Remember, China is basically supply, and at the moment, the demand side is the Fed. If you want to simplify the economy right now, they're the two big parameters around it. Basically, what we have here is emergence of more infectious subvariants. We know that they have a policy of lockdowns, and that can hurt the supply chain. So it's a story to watch over the next coming weeks. Let's begin by talking about some of the macro data out there. So when the SP 500 has basically done what it's done here for the last 30 days, we tend to see these little red dots starting to appear. Now, it can be close to lows in markets. You'll notice over here, the red dot appears. The red dot appears during the 2008 crash and previous times. But it does seem to have a pretty good barometer reading on close to the lows. And look, we've been talking about recessions and their average returns, which we'll discuss soon, but this is what the reading's coming up with, and we've got a little red dot now appearing on the charts. So does this mean that the market's bottomed or close to? Well, it's possible, and we'll talk about more of that soon. Investors in the macro. How is the general American investor feeling about the markets? Frankly, terrible. The trend has been down this year in 2022. Everyone was ultra bearish over the last couple of weeks. And this is the important factor to think about. Everyone's bearish. When everyone's bearish, what is the market going to do? Most likely move up. It's why we've been talking and really consistently pulling out the idea of the bull trap coming, which seems to be eventuating at this stage. Some other charts here showing us this. Net investors taking higher than normal risks. It's dropped to a 2008 low. 2022, all of a sudden, we've gone from peak euphoria to peak fear very quickly. The percentage of equities versus cash. As we know, the US dollar, cash is king in 2022 so far. It hit lows that were equaled with 2008. Now, that didn't mean that the market was at the end just yet. You can see here, cash got to this level a little bit earlier during the GFC. But what it did do was it began rallies that then often dumped straight after that. So a lot of people getting fearful on this market. Again, really showing us that maybe everybody's a little bit too more fearful. We need to get a few more people into the bullish side, which is a great trade opportunity. And then, of course, there's a potential of an even better, maybe short sell later on in the markets. And we'll look at the levels soon that it may reach. Let's also talk about number of inverted yield curves. Now, you'll know if you've been watching this channel for a while that we talk about 50% plus of yield inversion, showing us basically that we're going into a recession. Now, at the moment, we're above 40. Some people already say we're in a recession. Technically, it hasn't been called yet. But the reason I say recession is important to mention is because if we do get it, there are averages that the S&P 500 generally falls during those periods. Now, we've got to remember that the 3-month yield can't invert with the 10-year or the 3-year or the 5-year at this stage. So basically what this is really telling us is that when the Fed raises rates later on this year, and remember, for anyone that doesn't know, this is what the Fed's going to do. Basically raise rates, hit something around 3.6% between December of 2022 and April of next year, 2023, and then the market's expecting them to cut. That doesn't mean it's going to happen. They could also have to stay very high to combat inflation. But once you get to a 3% plus, what's going to happen? All of the short date yields are going to invert, pushing us over the 50% barrier. So it's almost kind of, at this stage with the current data we have, almost a sure thing that we're going to invert. And if we invert, that means that we generally have a recession coming. In fact, every single time since the 1970s, it has been the one indicator that said 100% of the time we are in a recession. When we're in a recession, what does this mean? Averages of S&P 500 drops go to 32%. So far, we haven't seen that. We've just seen it go into the 20s. Obviously, the Nasdaq has found the bottom, but just everyone's so negative on the markets. It's time for this kind of nice relief rally. Look here at big percentage flows. This is the fund managers. This is the leverage traders. What have they been doing? The leverage traders have been trying to short the market, and fund managers have been hugely negative. It's time for some of the fund managers to get back in. They can't all be correct. So we need them to try to get back into this market so it can then turn around when other people don't expect it to. Of course, it begins these types of rallies. And the reason why really they can even come up with a story of rallies is earnings. It's just not as bad as people expected. And it makes sense. If you look at all of these markets out there at the moment, if you follow shoes, I think there's a new LV shoe that just came out the other day. They sell for 4,000 Australian dollars. Then they resell for 22,000. Does that sound like we're in a recession? Probably not. They're just shoes. Same with watches, same with comics, same with collectibles, same with used cars. They're all still really high and sellable above the RRP, some of them mass-produced products. So it means that really the fluff hasn't come out of the markets yet. People still have relative confidence in the economy, otherwise they wouldn't be buying this stuff, or at least they have a lot of cash. So with Netflix's results being, I guess you would say on the money, with the banks so far being decent, if not a bit better than expected, then what does that bode for Tesla? Well, we'll look at Tesla in just a few moments, but we've got some big tech stocks coming out. We've got Google, of course, Amazon, Microsoft, and Apple all next week. If these results come in good, could we see further rallying in this market? I think that's certainly on the cards at this stage. If we talk about bottoming of markets, though, this is where it gets kind of more interesting. There is a chance that we actually saw the low in the tech stocks, but maybe we haven't seen the low in the S&P 500 first. We brought this chart up a little, literally in the previous video, and basically we talked about the idea that tech bottoms around 4 to 6 months ahead of the S&P. So while come December, we might even be lower, or October or November in the stock market, the S&P, it's possible that yes, the tech might come back down, but it may not actually hit new lows. So remember, growth, XLY, all of these other things, consumer discretionary, often can go first because they were hit so hard already by the market. So it's going to be confusing here, but certainly something we need to be looking at. So let's talk about earnings, and the big one's coming out soon. That's Tesla. That's happening on the Wednesday. Now, of course, we need to look at the charts. What's been happening recently? Well, we've got a higher low kind of setup here where we've got consistent buyers coming in. We also have a lower high setup coming in with sellers selling each time it goes up. All of this goes on to form what we call a coiling market or a symmetrical triangle. Basically, many people will look at this and they'll say, well, I don't have a direction. The answer is correct. You don't yet. But this is very, very common ahead of news. And what it's telling you is that the market is getting ready to explode out. Whether it explodes to the buy side and fills the gap over here, or it explodes to the sell side, it's showing that it's getting ready for that move, and then that move may also follow through for a few extra days. So a lot of people are certainly starting to bet on Tesla going up, and there's some great reasons to do so. We're going to go through our sponsor of today's video, which is Tiger Brokers, and we're using the platform here to show us some of the analysis techniques. So over on the platform, I always like to get information really quickly. We can get the short interest rates here instantly at our fingertips, which is nice. Get the PE valuation analysis. And one of my favorite features is the Analyst price targets. This is something that actually usually is in things like Bloomberg Terminal, Reuters, that kind of stuff. And I love having this up to date in here. Now, you'll notice that, of course, with analyst price targets, they have target high prices and lows. And with Tesla, there is a differing opinion. The high price is $1,620. The low price is $67. That's pretty low. But what it does show you is that the latest price is $736. And what a lot of investment managers out there do is they show these kind of averages to their investors. They say target mean price here that of all the expectations is 882. So this becomes important because the current price is only 736. Obviously, they've got 882 as their target. So what that's telling you is that it's currently undervalued, at least in their expectations, over the next 12 months. If that's true and we have increase in buy ratings, we know that all of these things can help the stock to move up. And after earnings, some of them may also change their statements. They might increase their levels of buys. You can see here current to a month ago, 23, now 24 on the buy rating. If they increase the amount of buy ratings, guess what? The stock tends to hike up. So it's great to be able to have all of this information, and there's so much more that you can get in the Tiger Brokers platform. There's so much information in here, which we'll be looking at over the next couple of weeks. You can get filings, news, posts by the community, quotes, and of course, another feature we've been looking at recently is the economic calendar for the different countries that you're trading. If you're trading the US, which we do love here, then you can go to the weekly, see all of the big announcements coming out, and always know what's happening next. So if you're interested in Tiger Brokers platform, click in the link description down below. There's a whole bunch of different offers for different countries out. So let's get into the charts and talk about the VIX. And the volatility index is dropping. We've got, of course, earnings season, yet it's dropping. People are starting to get a little bit more confident in the market. We're still at the 24. Previously, we spiked off this level. But when we dropped through the other two times in 2022, we went quickly down to the 20. We know the 20 is a big level. For VIX traders, a lot of VIX traders love buying the 20 because they see that spike coming through. But when it gets underneath 20 and sustains, that usually means we're back into a normalized bull market. So there's a lot at stake here. Watch the VIX. If it falls through 24, maybe we go down to 20, and that could also bode well for the market moving up. Here's another one. We've got, of course, the US 2-year versus the SP 500. What's happening with the 2-year? Well, it's interesting. We've got the yields going up and the stock market's going up at the same time. Have we seen that story before? Remember back to March into April, it's not the best sign in the markets if we get yields going up, meaning inflation potentially is getting worse, and we've got the stock market going up. It has the signs of bull trap on it. A good level or good thing that's happening in the markets though is that the dollar index hit that excess. So remember, we're so far away from monthly 20 moving average, from the weekly 20 moving average. We hit it and we've sold off so far. So if money's coming out of cash, where's it going? Well, one of the conclusions that people are starting to make, which is always a good conclusion, is into the stock market. A quick fall off here. We fell through that really important zone instantly into the second demand zone, the daily 20 moving average. And I could see the US dollar kind of coming up here a little bit. I'm not sure if I'd want to take that trade against the trend that's currently now down on the smaller time frames. But if we keep falling, where could we go? Well, the answer is probably the weekly 20, and that's mean reversion. Basically, it would fall all the way down here, and if that happened, of course, the stock market would most likely go up. So dollar index falling is a good sign. If we go to the smaller time frames, such as the 1 hour, you'll notice it is at this stage consolidating. So basically, it's moved down to a level that we all expected. It's currently in either accumulation or distribution. If we get a new low, watch out down below, because I think at that point you will see further weakness here in the US dollar. So watch the lows here, guys, around that 106 kind of 50, 106.40 area will be pretty important to watch over the next coming sessions. Move over to gold. Nothing to report here. We'll come back to gold next week once we find out more. Everybody seems to be still selling off gold. If you're in the sell, cool. If you're in looking for the buy, I don't know if the time is just yet, but we will revisit it very soon. Let's now talk about oil. So the downward trend. So it actually breached the downward trend in the last session. We went a little bit higher and then we've instantly sold off. And this is interesting because we could actually be changing. This could be a little false breakout. Now, did we break past this high? The answer is no. We got to it. We've effectively gone back to the supply or the resistance, and then we've sold off that level. Notice here we have the low, and we have an equal low. We breach that low, we probably will pull back up, but I think shorters will come back in here in oil and start pressing it down. So new low is super important here for this to occur. Basically, new low, rally, short would be the general kind of consensus on the technicals right now with this. If we go new high from here, get ready to look for the buys. This is a super important zone, and you have to be able to flick the switch like any good trader or an investor at this point. Super interesting times for crude moving forward. Of course, Netflix, decent earnings. Well, not decent, better than expected. It doesn't take much to be better than expected when you drop from $700 price all the way down to 165. For people that have been accumulating here, I totally don't blame them. We talked about it in the Monday live stream that we do. If you're ever interested, subscribe. We do Monday live streams. And of course, we have private live streams pre-market. If you're interested in the links in the description down below. But this is nice accumulation. Great kind of weekly close last week. Things looking good. And we closed, well, we've got a aftermarket sitting at about 217, which is basically breaking out of this accumulation. So is it time for Netflix to go up? Well, they've got a new strategy to deal with all those people, those pesky people out there that are sharing their family licenses with 100 people or whatever they're doing. And will it work? I'm not too sure, but certainly the base seems to be looking quite nice here on the charts. Apple, a barometer of the health of the US market in some ways, is back at resistance after that sell-off. A few big stocks, Google, Apple, Amazon, they're starting to make waves, but they're not really necessarily coming with the market fully here. Probably look towards Apple still rallying. Hopefully it can hit something like a 156-ish before earnings. And if that happens, of course, that will mean the S&P 500 is continuing to move up, which we'll look at in just a few moments. Go over to the European market. Big, strong candle. Wow. Double bottom in play. Straight into that resistance we theorized. What a trade. I mean, especially if you got it through this high here and you just rallied through that session, that was amazing. Really nice work, guys. This was the low. Of course, we've hit this resistance. If we breach that, any pullback you'd probably think is going to be met by buy demand for now. Maybe we go to fill this gap just above 13.6. So that would put you in at around 13.7 to 13.8 would be the target here. Need to get a little bit higher, hopefully pull back, then movement into that area. So yes, the German market and other markets around the world seeing some nice buying. Makes sense. The US dollar's weakening, money's coming out and going into assets. Dow Jones, what's going on there? Nice breakout. Not quite new high yet, but certainly consistent. Maybe this is a bit of a spring. Huge movement up. It's left behind what we call an island style trade, which is, usually a very impulsive kind of move, usually filled with kind of very fast action and then pullbacks later. Not too much to talk about with the Dow here, but it is improving. IWM at the trend line, so small caps doing well. Trend line here, like to see that broken. Further rally could be in order. Remember, there's a gap here between these two ranges, so that's certainly something that a lot of people are looking for. And it's looking much, much better than it did in the last couple of days. Move over to the Nasdaq. This is the one that had the tweezer kind of low. We had the doji, we had the wicks coming off these defended zones, and the Nasdaq is outperforming. It's filled that last gap. It looks like it's broken out with a close above. And even if it weakens in the next session, it looks like this is kind of trying to press towards the 12.8. We've got a big trend line here on the Nas, and this could be worthwhile watching. For bulls to really be committed into this stock, they're going to have to, or into this index, they're going to have to push through the previous support, previous resistance area of 13,000, move through, and then ideally, it will pull back, allowing the buyers to come in. We have not got through a massive hurdle yet for the Nasdaq. So we could easily do kind of this. Take that out quickly and then reverse. Wouldn't that be an ultra bull trap? Whew, that would be big. We'll be following along, so make sure to subscribe if you're interested in finding out more information about that. S&P 500, really nice. Wicks off the defended zone. I think we've been on top of this as a community. Well done to you guys out there. Nice big bullish move here. 39.36, strong day. Did a huge day on the S&P. Can it continue it up? Well, hopefully. This is the weekly. Weekly 20 sitting around. Just remember this 41 kind of 20. Probably will be 4,100 by the time we might get up there. What is the current target a lot of people have? It's the gap fill. filling this over here. So a lot of people are trying to target in basically the stock market moving back to 4,015. If that occurs, well, then could the sellers come in here? Yes. But the ultimate trap we'll be talking about in tomorrow's video, because I've got other plans that have to do with this little level here, and we'll bring in some cross analysis there on this. So at this stage, looks pretty good. If we scroll down, actually we'll use the futures for this. If we have a look at what's really happening here, the market has broken through the downward trend line, down, breach. There's no way you cannot see that as a breach now from a technical analyst standpoint. Pullbacks, say 3,900. Let's say we get back down there. You would think buyers will come back in to try to show commitment towards this, move towards that 4,020 area, which is where we have the gap fill, and possibly even further up to that 20 moving average sitting around 41.20. We'll talk about all the scenarios as we see the next couple of days unfold. I'm going to be very interested to see how Tesla ends up doing things. We'll move over to the big one, the big crypto, Bitcoin, broken through. Bodes well. We've broken the supply and it looks like Bitcoin's on the improvement trail. Will it hit 26? Will it hit 28? Most people are kind of saying, well, if the stock market keeps rallying, what would make sense for something like Bitcoin? Maybe up to like a 27.5, hit this level, and then potentially move on down. That could be certainly a very, very key thing. This is a good breakout here for Bitcoin. Hard to think it's false. It's coming with the stock market. Volumes improved. And I did actually miss out on showing you guys Ethereum the other day, but Ethereum led here. It broke out of a very nice hold pattern. A few people messaged me and said, Tom, why aren't you talking about Ethereum? Yeah, fair enough. It was a nice breakout. And if you got this trade, well done. ETH outperforming BTC. Pretty rare for it to do this actually, but nice volumes down below. Again, it looks like crypto's having a little bit of a run on it. Possibly sell-offs will be met by buy demand as the sentiment improves here, but don't be fooled. This doesn't mean we're out of recession, we're out of all the traps of the market just yet. It's the beginning of something that could be a really great opportunity if you know what you're doing. And it also could be the low for something like the Nasdaq. You never know if we printed that actually a little while ago. Remember, Nasdaq tends to print early. I don't know if it has. Time will tell. Follow us here on the channel to find out more. In terms of information coming out, if you're interested in following us, come over and follow us at FX Evolution on Twitter. You'll notice here we posted on Pelosi the other day. I will have some new posts today, but she's doing well. Those NVIDIA positions, nice. It must pay to have information from certain sources. Anyway, let's move over to what else is happening this week. Friday the 22nd, we have the Flash Services PMI for the US. It's mostly down to earnings. And of course, we also have another big one. Do remember, Thursday, 8:45 a.m. New York time, ECB press conference. If you're interested in continuing to follow us, remember to subscribe, smash that like button, and remember, for especially the Australian viewers out there, if you want to get access to Tiger Brokers, there's a special offer down below, 20 free Zip stocks. Who knows the potential of how big Zip could become once again. So if you're interested, check it out. See you soon, guys.